Good morning, everybody, and welcome to yet another JBS discussion. My name is Lyle White. I head up the Johannesburg Business School. We are very, very excited today to talk to one of the leading experts on the theory of constraints, and also lectured on the MBA here at the Johannesburg Business School, but he's also a leading authority worldwide on this. First and foremost, we have some crucial lessons to learn from. And what I'm very, very excited about is Alan's going to take us through this. Dr. Alan Barnard, he is one of the world's leading decision scientists. When I was delving into an area that I'm not too familiar with, and it was a very, very exciting moment reading up about the theory of constraints, because this is what Alan really presented to us and said, well, this is something that we've got to think about. I immediately started thinking back to decision-making theories and what is the importance of decision. Coming from an economic background, I was reminded of the origins of economics, of classical economics, rational thinking, bounded rationality, and all these other things that factor into some of our thinking. I brought up some of the theories. He's a practical person. He's in the real world of decision-making and around applying that theory of constraints to his world and to his clients. He has a stellar CV of clients, of his experiences, and most importantly as well, of his background and what he enjoys doing most. And I'm really looking forward to engaging with Alan. So without further ado, and without taking up too much time for this session, we've got an hour to go or so. I'm going to hand over to Alan. Thank you very much for joining us.
Thank you, Lyle, and thank you so much for the introduction. As Lyle mentioned, this discussion is really about just sharing some crucial lessons that I think we could learn from COVID-19. As a brief introduction, I'm CEO of Goldratt Research Labs. I had the amazing opportunity to co-found the company with Dr. Eli Goldratt, who's the creator of Theory of Constraints. He wrote this seminal book, a classic management book that's taught in most MBA programs called The Goal, published in 1984. One of the top 150 books of all time, sold about 10 million copies, and it provided some key insights of why constraints, knowledge of a constraint in a system is really important and very useful. And I'll share a little bit more about that. What our research lab does is it's driven by helping both organizations and individuals make better, faster decisions when it really matters. We make thousands of decisions every single day. That can be quite overwhelming. The good news is that most of those don't matter, but a few do. Getting those right or wrong can have a huge impact both on your personal life as well as on that of your organization. And what we study in our research lab are what are the avoidable and consequential decision mistakes that people make both in managing complex organizations, but also in managing and trying to improve their own life. When we are partnering with organizations around the world, and we've had the privilege of working with some of the industry leaders, many of them Fortune 500 companies, we work with them to answer just two simple questions. How much better can you do? If you look at that graph, is it a little? Have you plucked all the low-hanging fruit, and from now on you can only make small incremental changes or improvements, or can you improve a lot? And the underlying assumption there that you have to challenge is we are doing the best that we can. And then the second part is how best to do it. What is the simplest, fastest, lowest cost, lowest risk way of doing that? And often the underlying assumption that we have to challenge there is that in order to get a big jump in performance, we have to make big changes. And big changes are risky, and as a result, we prefer not to do it. What I'd like to show you today is a few examples of how small changes in the right area can have a dramatically big impact. And over time, we've tested these ideas, both in the private sector. For example, we worked with Microsoft. We helped them to redesign their global supply chain, simulated that supply chain to test all the new strategies that we developed with them. And in the same financial year that we started on the main product categories, they got their inventories down by over $250 million and sales up by a few $100 million. And this was an organization that, as you know, is the largest in the world in terms of market cap, but also probably one of the most effective and efficient organizations. But it shows what the potential is that can be unlocked even in the best companies in the world if you can focus on the right areas. All the way to working with, for example, Utah State Government with their governor's office, where we help them to identify what are the key enablers to improve the productivity of their various agencies by at least 25%. We worked with a team of amazing theory of constraints experts on the project, and driven by Kristen Cox, that is an incredible woman that leads that governor's office. So it's a very large range of experience. Our organization is really inspired and driven by this simple quote that has inspired me personally from a very young age. It's a quote by Jean-Baptiste Perrin, one of the leading scientists, French scientists that first validated Einstein's theories. And he said that the goal of all science is to substitute visible complexity for invisible simplicity. And I hope that I can share with you some of that invisible simplicity that we've discovered when it comes specifically towards improving, analyzing, managing complex systems, and specifically related to decision-making, especially when you're going into a situation that is so difficult to imagine before the time like this COVID-19 pandemic. So let's start with, I want to share 8 lessons that I think is worthwhile learning from this pandemic that hopefully can be applied both in terms of the recovery of your organization from this pandemic, but also to prevent such a crisis from happening again. So the first one is why are so many businesses so fragile? These are statistics that have been released a couple of days back, and it basically shows that the number of permanent closures in the US have now outnumbered the temporary ones. And that's devastating. And obviously on the right-hand side there, you can see which industries have been hit worse: the restaurant business, shopping and retail, beauty and spas, bars and night life, and fitness. Many of these businesses have been built over decades. Some of them are multi-generational businesses. And literally within a couple of months, they've closed down. And in order to understand that a little bit, I'd like to share with you what I think is probably one of the most important classifications that have been developed within the field of decision-making and analysis of systems in general, but specifically organizations and people, which is the work by Nassim Taleb in his book that he launched in 2012 called Anti-Fragile. He said, when you look at systems, you can classify them as being effective or efficient or compliant, but a more useful way to classify them is to see how they respond to positive and negative stresses. And there's 3 types of systems: one that are fragile, one that are robust, and the real opposite of fragile, which is not robust or resilient, but anti-fragile. So what does a fragile system look like? If you think about this graph there, the vertical axis is showing you the positive and negative impact of a stress. So that could be losses and gains in a business, making profits or losses for a person. Those losses and gains could be your emotional state, how happy or unhappy you are. On the horizontal axis is the stress, the negative stress on the left-hand side and the positive stress on the right-hand side. A fragile system is one that is harmed more by a negative stress than what they benefit from an equivalent positive stress. So over time, even if the negative and positive stresses are random, they should cancel it out because they are harmed more by negative stress than what they can benefit from a positive stress. Over time, their performance goes down, and often one big negative stress can really kill them. If you think about a single person business, if your demand for your product or service goes up by say 10 or 20 or 30%, your sales will grow, your profits will grow. Up to a point. What is that point? Where do you start getting the limited gain is where you reach your capacity limit. And that's where theory of constraints comes in, is every system has at least one constraint, else it would be producing infinite goal units. So as soon as you hit that constraint, your performance will plateau on the upside. But imagine losing 50% of your sales. Suddenly you can go bankrupt. And that's what a fragile system looks like. A robust system doesn't have a concave response to stress, but a sigmoidal response to stress. So it's figured out mechanisms to limit the pain, but often those same mechanisms that limit the pain or the downside can also limit the gain or the upside. A good example of a robust organization would be a very high fashion goods company like Gucci, etc. When there's a downturn, maybe their sales will go down by 10% or so. If there's an upturn, maybe their sales will grow by 10%. but it doesn't grow substantially or go down substantially because the type of clients that are buying from them are not that affected. So robust systems over time, they don't really care that much about volatility. It harms them a little bit if there's a downturn, they benefit a little bit, but over time they end up, as long as the negative and positive stresses cancel out, they're equivalent, then they'll be fine over the long term. An anti-fragile system is one that looks like this, where they have a convex response. They've got limited pain. They have mechanisms to reduce the pain, but they also have unlimited gain. They can fully capitalize on the gain. And that's a key lesson here that I want to share as the first lesson. To become anti-fragile, to transform your organization from fragile to anti-fragile, you need enough options, enough changes that you can introduce into your organization or in your life that has a big upside if it works, small downside if it doesn't. The options you want to stay away from, the changes you really want to stay away from, are those ones that have a small upside if it works and a big downside if it doesn't. And that leads me to the next insight or lesson that I hope we can learn from that, is that there's asymmetry in reality. I want to ask you to do a mental experiment with me. What do you think your response will be if you walk into a casino and they tell you that they've got a new game that they are offering their clients? You will win or lose randomly, completely randomly, and it will be 50-50, either winning or losing. Every time you win, you'll make 30% of whatever money you've got. Every time you lose only 25%. Do you think that this would be a great game? And when we've tested this around the world, most people would say, absolutely, I will jump at this type of game. I will make a fortune. And if we had a bit of more time, I can ask you to do a little experiment, but I'll show you the calculation. So for those that want to try it out, just open up your smartphone, go to your calculator. And what I want you to do is to say, start off with 100 and go plus 30% and minus 25%. Plus 30%, minus 25%. Plus 30%, minus 25%. Our intuition screams at us that because there's asymmetry in our favor, over time our wealth will grow. Actually, the opposite happens. After just 20 such trades, we would be left with 22% less than what we've started with. And this was really interesting. I discovered this phenomena just when Anti-Fragile came out. In about 2011, I got the first draft from Nassim Taleb. And I tried to build a robust system. And I thought a robust system is one that, you know, if you imagine a business, 1 year it makes 20%, the next year it loses 20%. 1 year it makes 20%, the next year it loses 20%. And to my very big surprise, such a system goes down very, very quickly. And you can see it in the numbers there. And why is that? Because the response to positive and negative stresses is asymmetrical. And if you wanted to understand the math behind this, you can actually calculate what the gain percentage is that you need in order to overcome a loss percentage. So some numbers here, if you can lose 10%, so it will be 10% over 1 minus 10%, so 90%. So 10 over 90 would be 11%. That's what you need, whether you are buying houses and selling houses, whether it's your business that's selling products or services, whether it's you individually that's selling your time for a benefit. In order to ensure that you break even, if you could lose 10%, you must be able to make 11%. But look at what happens when you could lose 50%, which is what's happened to many businesses in the COVID-19 crisis. They could lose 50%. Their break even is 50 over 50 is 100%. So the lesson here is, number one priority for any organization, for any individual, is to protect itself from big downsides. Those are the things that really kill us. And how it answers the question at the top is, why is there such a large and growing wealth gap? We built a simulation model. We've got 1,000 agents that are trading with each other. Every time they trade, they can either make 20% or lose 20%. And you can play around with those numbers. They can make 30% or lose 25%. And what is fascinating, over a very relatively short period of time, the majority of them will end up with almost nothing. And quite randomly, a few of them, and sometimes just one, gets all the wealth. And we think that this is a very interesting, different way of explaining why the wealth gap in the world is not just large, but will continue to grow. It has very little to do with discrimination and all to do with the asymmetry in the maths when we are trading, making trades. So next one is, why are system constraints so important? What is a constraint? Very simply, it's a resource that just doesn't have enough capacity to meet the demand placed on that resource to achieve a certain goal. So once you define the goal, defines what resources I need to achieve that goal. And if I don't have enough of those resources, that's a constraint. But we can actually classify systems based on constraints and buffering. Rather than looking at the complexity of the system as determined by how many parts or interdependencies there are, we can also look at it from a constraint perspective. So a simple system is one that has a single constraint that is properly buffered and protected from the rest of the system. That makes it very simple. How do I analyze, improve, and manage a system? I only need to analyze A, if A is my constraint. How do I protect the system? As long as A is protected from being starved or blocked, the whole system is protected. When I have a complex system, I have multiple constraints, but they are still decoupled. But now to improve or manage or analyze the system, I have to go and analyze, improve, and manage each of the parts of the system. That makes it complex. Chaotic is when I have multiple constraints and they're interactive. There's no buffer. And the way that we can show that is with a very simple dice game that appeared in the goal. And basically the question is very simple. Imagine you have machines or processes A, B, C, D, E. They work in series to produce some product or service. And each of them on average can produce 3.5 units per day. The output is determined by the throw of a dice between 1 and 6, very nicely uniform distributed. And the question is, how much will this little factory or business of mine produce after 100 days? The devastating answer is it will produce about half of what you expect. You'd assume that because each machine is capable on average of doing 3.5 a day, multiplied by 100 should give me 350. And that's the commitment that you will make. When you actually play the game, and we've created a simulator that will give everybody access to at goldratt'sdicegame.com that you can actually prove this to yourself, is that you get about half of that out. Why is that? Because of the asymmetry in the maths here is that if A throws a 1, it doesn't matter whether B, C, D, or E all throw 6s. Only one will come out. And if A, B, C, D all get 6s, doesn't matter if E gets a 1, only one will come out. Now, that's a devastating part, but there's an upside to chaotic systems, is that small changes can have a big impact. So if I just put buffers of just 1 in between there, so if A got a 4 on day 1 and B got a 3, that additional 1 can go into a buffer that will be available for the next day when B gets a 4 and A gets a 3. Just that tiny change will already get my output from 165 to 210. That's a massive improvement in output, but we still have a problem. We are only 60% reliable on a commitment that we've made to customers and our investors. So how can we turn this chaotic system into a complex system? Is by adding enough buffers in between, by decoupling them properly. And suddenly we get another massive jump of 210 to 280. And now we not only have improved our throughput dramatically, but we're also getting much more reliable. But still in today's environment, you can't be 80% reliable. Customers will switch over to a competitor. So what is the counterintuitive solution here? To both increase the output, but also to dramatically increase the reliability of your commitments to customers and shareholders and suppliers, is make a chaotic system simple by selecting one of these and turning it into a bottleneck. So slow down A, so it can only throw between 1 and 5. It means its average will drop to 3. We can use that bottleneck capacity to now make a commitment. So we're not going to commit to 350, we'll only commit to 300. And remarkably, if we've got enough buffer behind it and in front of it, so it's never starved or blocked, it will most of the time produce very close to its theoretical capacity, which will be higher than the complex system. And we are getting 95% levels of reliability. Most systems that we work in today, most organizations, either because of design, where they're trying to make the system super efficient and design it in a way of balancing capacities, or over time through debottlenecking or downsizing or right-sizing, they end up being complex or chaotic. In these environments, you can't identify where the bottleneck is or the constraint. It moves around all the time. A much better approach is select one, make it a bottleneck, and suddenly you'll dramatically increase your performance. So if your system is chaotic, which means that lead times are very long, you're getting much less out than expected, you have to reduce the commitment or the WIP, make it simpler and more stable by turning it into a simple system. The lecture that I give to the MBA program goes into much more details about this. If you're interested, I think that lectures are available to be sharing. And this is just a visual explanation of why that is happening. What is the impact of a resource constraint is that you have queue times growing a little bit linearly as you increase the utilization of a resource. This is a resource that can be a single bank teller, or it could be a whole supply chain, doesn't matter. Work arrives, work gets completed. The rate of the work arriving over the resource capacity gives you your utilization. Reliability drops a little bit as you grow your utilization. Throughput keeps on increasing until you hit the capacity constraint. But now what will happen is we expect it to keep on growing or decaying linearly. But of course, with queuing theory, we know that these things explode. They grow exponentially. The queue time, traffic is a good example. A trip that might take you 30 minutes, traveling 120 kilometers an hour for 60 kilometers, 30 minutes could also take you 3-4 hours if the road system is just overloaded. And this is an important insight because it also deals with our own productivity. If you think about a one-day task, how long should a one-day task last? Well, it could last one day, depends on your utilization. If you're 50% utilized, one day is already accounted for. That same one-day task will take you 2 days to complete. If you're 80% utilized, the same one-day task will take you 5 days to complete. But if you're 99% utilized, it will take you 100 days to complete. So that's a key insight here. You have to, if you find yourself in the scale zone, you have to find a way of getting out to this edge of chaos without jumping too big. And this is an important lesson, is when we see backlogs, there's a bottleneck. If we see low reliability, it means our buffers are too small. Both of those will contribute to lower throughput, higher cost. But why is that? Resources don't wake up to become bottlenecks. We have made a bad decision by overcommitting or overproducing. Why is our buffers too small? We've made a bad decision. We've underestimated variability or the impact of it. And both of those are driven by bad assumptions. So if we see this causalities in reality, it's normally find out what are the decisions and the bad assumptions that have caused that. The last 3 quick insights is around the recovery. There's different shapes of the recovery. This is what a poll showed when we asked thousands of people to tell us what they think will be the recovery for their industry, but also for them personally. J is where you actually will benefit from this COVID-19 crisis. There's about 10% odd people there, but the majority think it will be a U-shaped recovery. And the lesson I want to show with you here is that even though it's impossible to predict accurately what the positive and negative stresses will be on a system, you can quite accurately predict the stress response. This is for a real company calculating what will happen if the sales go down by around 25%, what will happen to their profits. They had a budget of 100 million in sales, 5 million net profit. And each of these recovery scenarios we can model and see how it will impact their financial performance. Look at the worst case and best case and see how we can make changes in the environment to get closer towards the best case. The last 2 quickly is, how should leaders respond to a crisis like this? Imagine these are the type of main issues that you have to deal with as a leader: the heart disease, cancers, massive amount of deaths. And you start noticing this little reported case. There's a few hundred people with cases and a few deaths, and suddenly this happens. The lesson here is when you have growth in demand that's exponential and there's finite resources, you have to panic early, not later. Always remember that if the demand can grow exponentially and on top of that there's finite resources, you have to panic early. everybody's been talking about the flattening the curve, but I think this is also a generic lesson when you are in a situation where you have resources that you don't have enough of to meet the demand, especially when that demand is growing. There's two steps that you must always do. The first is identify what are the resources that are in critical scarcity at the moment, and think about how can you raise the capacity there. How can I pivot? How can I get the alternative sources of those capacity? And normally you need them in a full kit. It doesn't help if you've got ICU beds, but you don't have ventilators. It doesn't help if you have the doctors and nurses, but they don't have PPE, or you have the tests, but not the test kits. So always think in terms of pairs. Two things you have to do is find a way of increasing your capacity immediately and find a way of reducing the demand peaks to smooth out that curve, to delay things that can be done later. And that obviously in this COVID-19 meant getting people full compliance, maintain social distance, wear masks, stay at home if you can, and isolate those people with underlying conditions. And then the last one I want to share is just why did so many leaders get this wrong? And this was a decision-making tool I developed called the Pro-Con Cloud method. It essentially helps us to understand why people often overreact or underreact, why they make avoidable decision mistakes, and to help develop options that has asymmetry in our favor. Big upside if it works, small downside if it doesn't. So the first step is, what's the problem? COVID-19 has dramatically reduced the income of our organizational family. Why is it bad for us and our system? As if we get it wrong, we'll be blamed and we might not fully recover or never recover. So what's a change that we can make as soon as we are aware of this problem is to immediately act to reduce the cost and secure other demand or supply sources. But we also have the option not to do that, not to take drastic actions, to wait and see. There's a positive of taking the action and negative if we don't. Those are the reasons that will allow us to make the change. If we underestimated these two, we will keep on procrastinating. There's also two reasons for not changing. If we've exaggerated those two reasons, we'll keep on procrastinating. And both of those pros are important to achieve our goal. Both of the cons can cause a major threat to us. If we're trying to understand why did we get into this position, why did we fail to have enough buffers? That was the action that caused this problem. And why weren't we prepared to fully capitalize on the upside versus taking actions now to buffer and to fully capitalize? Again, there's positives of doing that and a negative if we don't. Those are the reasons if we do. If we've exaggerated these, we might overreact. If we've exaggerated the pros of the no change or the cons of the change, we might underreact. So this is a very simple diagram to help us see why we might over or underreact. And from this, we can then extract some key assumptions. So the bad assumption here on the planning side was that most leaders assume that events with low probability won't happen, or at least won't happen to us. So no need to protect against it. Really? COVID-19 wasn't a black swan. Coronaviruses have been plaguing us every 10 years. SARS in 2002, MERS in 2012. What makes us think bad was that it didn't affect people immediately in terms of symptomatic release. So a lot of people stayed asymptomatic, and while that was happening, the virus was spreading. And it's very difficult to protect yourself against that because you can't scan temperatures. Most of the people are carrying the virus and will keep on spreading it. So the type of responses that worked before didn't work here. We should have learned much faster. On the execution side, why did people wait so long? Many leaders is in a crisis, it's better or safer to wait and see, as we are more likely to be blamed for overreacting than underreacting. Really? That's the bad assumption that needed to be challenged. So having buffers and reacting as soon as possible is very cheap compared to the alternative. We've built economic models of this crisis that shows if governments have taken actions around February, when the evidence was overwhelming, it would have cost them a few billion. By waiting, it is now costing trillions. This is 100 at best to 1,000x the impact by waiting. And the last quick story that I want to end up with is I was very privileged to work with Professor Albert Bartlett. He had this famous quote. He said that the biggest weakness of humankind is our inability to understand the exponential function. And we created a little simple analogy to explain this to leaders. Imagine you have a bottle. There's a single bacteria in the bottle. Every minute it doubles. After 60 minutes, the whole bottle is full. So the bottle represents the resource, the scarce resource that we are in control over. And the question is, at what time will you take action? At time 59, the bottle is only 50% full. At time 58, it's only 25% full. At time 57, it's only 12.5% full. When will you take action? And if you do take action, just before you run out of the bottle, you've sent out this troop to say, find us more bottles, go and get us more ventilators or beds. And they come back and say, we found another bottle. How long is it going to last you? 1 more minute. And that's the trouble with exponential functions. We are not trained. We often make decision mistakes because we extrapolate from the past. We don't understand the exponential function, and yet they are highly predictable. You can build simple models that can show you very clearly what's most likely going to happen, at least best case, worst case. So that's where I will leave it off for the discussion today, and we'll open it up for any questions now.
Great. Alan, thank you very much. It was wonderful, and it's a real privilege for us to be able to almost delve into some of the work that you've done in a great kind of compressed masterclass in this way for this particular discussion. Alan, thank you very much. Your work is fantastic. You've made a wonderful contribution, not only here today, but also with the Johannesburg Business School's MBA program. And I know that a lot of people are going to be asking questions around this, so we look forward to further engagement.